Good morning and welcome this morning to Trading Futures. There's the opening bell, which means that the cash market's up and running. The futures market's been awake, so we're awake. Let's get into this discussion here this morning. I'm joined out there in the chat by my good friend Connie Hill. She's out there to help facilitate the conversation. Welcome to all of you. We're glad to have you here with us. And in this discussion, whether you're in the live version or the recorded version, we're glad to have you with us. Be a part of the conversation. Chat in your questions or leave us a comment. Remember that everything that we talk about is simply for illustrative and educational purposes only. None of the symbols that we talk about, none of the strategies that we talk about, none of the accounts types or ideas that we talk about should be considered to be any kind of a recommendation. Remember that futures and futures options trading involves substantial risk. It is not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options prior to trading futures products. They require separate trading authorization. And I'll show you some resources where you can go to learn a little bit more about that. Also, um, when we talk about today, which we will, and I've got this in my plan, we're going to talk about some components of the futures market, specifically virtual currency derivatives. We'll talk about those here in just a second. But remember that investing involves risk, including the loss of principal. And for some products and strategies, including futures, there is the potential to lose more than your initial investment. Stop orders don't behave the same way with futures the way they do in equities. Due to exchange rules, an exchange may reject an order or may substitute it with an exchange designated limit order for that originally triggered market order. Real quickly, let's get into this virtual currency derivatives disclosure because this is something that I want to talk about today. Um, Virtual currency derivatives trading involves unique and significant risks. There are a couple of advisories that you should read before considering any of those transactions. The NFA Investor Advisory on Futures on Virtual Currencies, and the CFTC Customer Advisory on the same topic. Remember that virtual currencies, they're digital representations of value that function as a medium of exchange, but they don't have legal tender status. And so that is something to be aware of as you consider this. Now, we're going to be using the Thinkorswim desktop software platform today, specifically the paper money version of that platform. It is a great learning environment. It's a good sandbox to practice. But as you move your practice from from paper trading to live trading, you'll recognize that there are some things that do not behave the same, namely order fills, also the use of studies in searches and scans, and the ability to trade some products. And so, as we talk about those, I'll try to point some of those out, but it's a good thing to pay attention to. Now, I want to again talk about this and just simply say virtual currencies are their own thing, they have their own kinds of risks. The reason I bring this up and the reason I'm talking about this is today is day one for the initial ability for some traders at Schwab to be able to trade spot crypto. Now, we're going to talk about spot crypto, not from a trading perspective, but as a market measure perspective. So I wanted to use this as an opportunity to jump into this particular discussion. However, there's a lot of stuff going on in the market today. So let's do this. Let's pop out to the market and take a look at what's going on. This is one that I looked at earlier this morning. In fact, I already got stopped out of an initial bullish trade in /MES. This is the micro E mini future. So let's take a look at this really quickly from the perspective of what happened. And then I'm going to come back and we're going to use this as a jumping off point for looking at what's going on in the overall market this morning. As starting to see earlier, I'm going to go over to the right-hand side of this grid. This is the /MES. This is the S&P 500 micro futures contract. So this is the smaller contract than the E-mini. Smaller notional value, different point value. When we talk about that movement, the movement is the same. So this would be the same as what's going on with the /ES, the underlying driver is still going to be the same. But I'm going to pop into this right-hand side grid, which is the today's trading 5-minute bar. So each one of these candles represents 5 minutes of trading. And so as I was finishing up my network hit this morning, came over here, started to look at what was going on in the E-mini futures and in the /MES, the micro futures, and started to see this little bit of a breakout. So over the course of the last few hours, since last night, the MES had been starting to kind of go sideways, making this kind of sideways range-bound pattern. And it finally broke out, and I was looking for that breakout. In fact, I kind of set this up so that if I got a bounce and a retest, that would be my entry point. And then looking simply to take advantage of a duplicate or a symmetrical move to the upside. So just kind of lining this out, here was my resistance level at the edge of this kind of sideways pattern. And you can see the oscillation going sideways here. Looking for the breakout. Let me kill that real fast so that you can see it. I'm going to change that color because that's not very clear against that background. So looking for the breakout right here, and then a pullback and a retest of this level of support. And so my entry, which was a buy stop entry, right? Buy stop entry, which was right here. Looking for, and that's why I labeled it as entry. So looking for a duplication. So I just simply took this distance here and duplicated it right there. So my target was up in this area. That's going to be right about that was about the 74.31 half level or so. Looking for that move to the upside on the breakout, and then stopping the trade out if it went the other direction. In fact, stopping the trade to the downside if it went this way, down to about 74.15. Well, it kicked me into the trade and then started in the space of another 10 minutes or so, because remember, these are 5-minute candles, to move down, and it stopped me out. Okay, so Tana asks a question, what's a buy stop entry? That's a great question. A buy stop entry says, stop, wait, don't buy that trade. Don't get into the trade, go long until a particular price level is reached. So rather than getting into a trade at the cheapest possible price, getting into a trade when the price has moved to a level that gives you some kind of confirmation. So looking for that confirmation to the upside. And in fact, it gave me that confirmation, albeit by one tick. Ticked up above that level, got me into the trade, and then it went the other direction. And that's the reason why, because there's no guarantee that directional movement is going to happen. I mean, I had pretty solid, when that happened, I had a pretty solid ADX number. It was above the 25 mark. There was some pretty good momentum to the upside. And yet, it reversed and kicked me back down to the downside, kicked me out of the trade. So now we have to ask the question. And I've often talked about this when I talk about technical analysis, is the idea that little excursions like this outside of a range. So we get a sideways channel that does this, right? And it goes up and it goes down and it kind of goes back and forth. When we get a little excursion outside of that range, like this, and then it comes back in, that's a pretty good reinforcement of the idea that this is trading in a range-bound manner, that range is still in place from a technical analysis perspective, which is why I had set my entry price. Let's see if I can, whoops, I got to go back here. Which is why I had set my entry price at a little bit above that level, right? A little bit above that, that range, to give me some confirmation, some confidence, albeit unfounded in this particular case, but a little bit of confidence that that breakout was in fact a breakout, and it wasn't. That can happen. And so that's the reason for having a stop, because we're managing that potential risk to some level if it moves in the other direction. And that can happen. And so that's one of the things that we've tried to consistently do in putting on these shorter term trades is have some kind of risk, not necessarily, a risk uh, management, but some kind of risk definition. There's still going to be risk. There's still the potential for taking a loss, which in fact we did here. Took a little bit of a loss because the price moved down and it broke down through our stop and we got kicked out of the stop or out of the trade. And now we're in the same scenario, right? We're in the same kind of scenario in this particular case, in that we've got two excursions outside this lower range. So my argument is very likely, from a technical perspective, that MES is gonna stay range bound. Now, there's no guarantee of that, but that's simply a technical perspective here, that we're likely to see MES unless there's some kind of earnings catalyst or news catalyst, that we're likely to see some range bound movement. Now, it is Tuesday, right? And Tuesday oftentimes, if we look at the longer term chart here, Tuesday oftentimes can be kind of that turnaround day. You get the over the weekend momentum move on Monday. Tuesday, there's some digestion, and then you start to see that move. So in terms of that type of relationship, there's no guarantees. That's just anecdotal, right? But so as we start to see this move. All right, so let's take a look. Somebody asked me the question, well, what kind of risk to reward am I working with here? Am I looking for? And I don't have, and I'll be honest, I don't have a specific amount. But if I take a look at what that potential gain was on that breakout, right? So this was the potential gain on the trade. I'm going to just say gain theoretical, right? The breakout move to that target. My risk in the trade, though, in this particular case was this amount. So this was risk theoretical. Now, it's possible that that order, when it broke through that stop, could have, if in a very fast moving market, could have filled me significantly lower. But if you just look at it in terms of price kind of differences, the difference in this, that's about a 1.5 to 1, maybe closer to 2 to 1 reward potential to risk, or gain potential to risk in the trade. And that's oftentimes what these kind of symmetrical move, breakout type retest types of trades will work out to be, because depending on where that stop is, it becomes, kind of a nice symmetrical ratio. It's getting out of the trade at a move down that gives confirmation when you got into the trade on a move that gave confirmation. Now, confirmation went the other direction here. So we're already seeing more of that sideways movement. Now, could I have used something to Sam Flanagan's point here? Could I have used something like a Fibonacci tool or pivot point? I mean, these were already pivot points, right? These were symmetrical pivot points. If I were using something like a Fibonacci, right? So I might take that move and just draw it back down here, from here down to here. And if that was my move, the entry point to my target was right at the 161.8 Fibonacci target. So I kind of like the symmetry of that. To be fair, I didn't check that, but it's interesting how oftentimes that that does move in that particular way. So that's kind of the way that sometimes those trades work out, especially these symmetrical price patterns. And there's some reason for that. Those levels of support and resistance. Not that Fibonacci has any kind of magic effect, but that it is reflective of kind of human nature and mathematical symmetry. So that's cool. All right. Now, we could choose a different time frame. You're right. I mean, we're using 5-minute candles here relatively fast. Now, that being said, I've got a more kind of a longer term trade that I want to talk about here in just a moment. But before we do that, I want to kind of get to really quickly what's been going on in terms of kind of the global futures market to get a sense of where we might be. All right. So why not just trade the range? So RB Tech Trader says, why not just trade that range, 74 to 74.20? And that certainly could be done for sure. It was breaking out. I mean, this was a circumstantial trade. And now that move, um, now you could, sure, you could pick a higher target, but that would make it a longer term trend trade. That would make it a trade that it wasn't to begin with, right? So yeah, there's all kinds of things that can be done /ES. Let's take a look at the big futures contract and some fairly increasing or significantly increasing ADX information here. Let's change that ADX. We'll take that one off. We'll take that one off. We'll change the ADX to an RSI on this longer term. Hide that ADX and just take a look at what the RSI is doing. So we have the RSI staying in that kind of, if you think about that, overbought range and pushing a little bit higher here. So /ES. Now, where we may be seeing some more strength here is in the NASDAQ, taking a look at that NASDAQ move, although kind of seeing that kind of backing off a little bit, RSI pulling back somewhat, maybe running into a bit of an advanced block on the longer term chart. I'm going to look at this here again in just a minute. /RTY, the small caps, kind of going sideways here. This up and down chop, again indicating some range bound movement, a little bit of a bearish divergence in terms of price moving. A couple of other areas, /VX. See what volatility is doing. And volatility getting a little bit, at least as far as the volatility futures, the VIX futures are concerned, volatility is starting to climb again. We take a look at this against the VIX. So this is the volatility futures. Let's take a look at VIX, the volatility as a whole, gapping up and selling off just a little bit here this morning. So volatility up, higher, a little bit more uncertainty, backing down a little bit from that initial move. /CL, the crude oil futures, moving higher. And this is, again, one of those areas where there's been kind of this range-bound attractor to that $100 a barrel level. And that futures contract kind of hanging out and sitting around that. So if we go back over to our monitor tab, and this is a good jumping off point, we're going to go back to /MCL, which is the micro crude futures. We've had this spread on for a little while, which is long the December delivery and short the July. Now the July delivery, we rolled into that one. The expectation being that July was going to get cheaper if there was resolution to the geopolitical issues. And the longer dated contract was going to get more expensive. Now, the longer dated contract is getting more expensive. It, in fact, has gone up to the tune of about 1.5 points in the last couple of days. So we've started to see some gain there. And all we're really doing is trading this difference. So if the front month contract, if the July delivery contract gets cheaper, that works in our favor. If it stays the same and the longer dated contract gets more expensive, that works in our favor. And if this contract were to go up a little bit, which it did, and this contract, the longer dated contract, were to go up a lot, well, that also works in our favor. We're trading that difference between these two prices, not necessarily the absolute direction of each one of these. And so when we look at this type of what is referred to as a calendar spread, where we've got two different deliveries, we're trading that difference between those two. The difference between those two, if we want to look at it mathematically, is just this. 98.23 minus the 83.5, 83.5, which is what the long dated contract is trading. The width between those, the difference between those right now is 14.73. 14.73, if that increases, that's essentially the trade that we made as we put on this calendar spread, was trading, and it was different when we put it on. In fact, it was significantly different when we put it on. But if that spread between the July delivery and the December delivery increases, that's going to get wider. If that difference between those two decreases, this amount is going to go down. So we want this difference to get smaller. We want this difference to get smaller. We want that $14.73 difference between the July contract and the December contract to get smaller, get closer together. That benefits us in this particular trade. So we want crude to go down. Doesn't everybody? Well, not everybody, because there are people that are trading crude to the downside. And there are some people that are trading crude to the upside and looking for that potential for that upside movement. We're certainly seeing that upside movement happening in the longer dated contract. So a couple of other things that I wanted to look at here really quickly as we jump back into our specific futures moves. I'm going to bring back up my futures grid here. And the futures grid is just a side-by-side chart that looks at a 1-year daily chart on one side and a today 5-minute chart on the other side. Now, Sam, you could flip the trade. Yeah, you could flip that trade and move that around where the short dated contract is long and the long dated contract is short. But you could also do two longs. You're not going to get margin relief in that particular case because both are directional, but you could trade that difference between those two deliverable dates, and that's what gives you that calendar spread. So I want to look at this one really quickly here, and this is /MZW. And this is the micro wheat futures. And I happened to notice this morning kind of developing itself on an intermediate time frame. So I'm not terribly worried about this right-hand side, the short-term chart at the moment. I want to focus on the left-hand side of this grid. And by the way, I'm going to go ahead and share this grid with you out there in the chat for those of you who are new to our webcast. I've shared this before. It's also in the description for this webcast. Anytime we share anything like this, anytime we share a grid, anytime we share a script or anything like that, or a watch list or anything else, that is for illustrative and educational purposes only. All right. So, taking a look at what micro wheat futures are doing in this particular case, and I started to see this pattern establishing itself here, and I'm starting to see this kind of very strong movement as we're getting into early summer, and we're going to start to see predictions in terms of crop estimates and things like that. There seems to be a little bit of bullishness in the part of the wheat futures. So I went back and I started to look at the pattern that's developing itself here. And again, this is an intermediate term trend trade. We're looking at a 1-year daily chart. So my view here, from a technical analysis perspective, I've got a little bit of a bullish divergence when it comes to the RSI. I've got some solid movement to the upside, some growing momentum. The last 3 daily candles have been moving higher here. And if I were looking for an entry into a bull flag, remember a bull flag, and if you want to go back and review, I'll ask Connie if she can to grab the playlist from the Trading Price Patterns webcast. But we're looking at a bull flag type of movement here, and you can see that kind of playing itself out here. Rally up, pull back, and then rally higher. So all I did is I took this move right here and I duplicated it up here. So that's my expectation, my target being this level here on a longer term basis. So what I'm going to do in this particular case is I'm going to focus on the potential entry into this trade, because one of the ways that we talk about entering a trade like this is on a close above the high of the low day type of entry, a hold entry. And some of you are probably familiar with this. If you've been to any of James Boyd's webcasts, you know this is something that he talks about on a fairly regular basis. So for an intermediate term futures trade like this and looking for that move, that type of entry may be an entry that gives us an opportunity to take advantage of this impulse move, the pullback, and then that move higher. So the close above the high of the low day, where does that occur and what has happened? So I've got this low day right here in that pullback, and that pullback is happening over the course of what, 5 or 6 days here. Actually 7 days in this particular case, and we get that pullback. That's okay too, but I'm looking for the lowest red candle within that pullback, and I'm looking for the high of that day. So the high of that day occurred right here. I'm going to draw the line across. So 2 days ago, or two trading periods ago, that would have been the first time that I would have been looking for a potential entry into this trade. Didn't have the close above the high of the low day. It closed at the high of the low day. So yesterday's trading period on a daily candle basis would have been my entry into the trade. I didn't see it yesterday, but here I am today. So now that I see this and I'm seeing some continuing upward movement, I have, based on that close above the high of the low day type of pattern, that's what I'm basing this entry on. I have an entry signal into this trade. Now, there is likely to be some resistance, in this case, up right around the 669, 670 level as a level of potential resistance into the trade. So we could see price run into that resistance and then fall. So the way that I'm going to structure this trade is the way that I structured even that entry, essentially the same thing as that entry that I did into the /MES. Yeah, and as Ags points out, it's also forming from a candlestick pattern, a 3 white soldiers pattern. Some strong, I mean, all that is really confirmation. Great call out there too, by the way. All that is really a confirmation of trend strength. You get increasing momentum to the upside. And we see that with the RSI, and that's overall kind of adding to this idea that there's some upward momentum into this next impulse move. So I've brought this back down to the more conservative, the conservative pattern. And yeah, there's probably some resistance right here in the very near term. You've got some resistance across the top here, right around the 650. Okay, cool. And if we go back to that 1 hour chart, that may be a constraint that we would put on the entry into the trade. But I'm trading this as an intermediate term swing trade in this flag pattern. Thanks, Connie. I appreciate that. All right, so what we're looking at doing here is getting into the trade, trading it to a target. I'll just tag this with my labels really quickly here. Our target in this place is going to be up here at 708. So that's going to be our target. Our entry into the trade is going to be right here on the current price. And our stop, now here's a couple of different places we could put the stop on this trade. And the way that we might look at that is that previous resistance, the high of that low day, and that kind of horizontal resistance that we saw there, that was broken on this breakout move, right? On the close above the high of the low day. That now potentially becomes new support. So if price moves back below that level, that new support now could be the trigger for us to get out of the trade. So what I'm going to do is I'm going to come down to a level that gives me, again, confirmation that price is moving down instead of up. So I'm going to come off of the bottom let me draw my line here. I'm going to come up off the bottom of that low. That was the turning point in this pullback pattern, in this bull flag pattern. So if we get a move below that, in this case, the 605 level, then that's going to be my exit out of the trade. And I'm just going to mark that right here as a stop. So there's my stop out of the trade. Yeah. So the play here is long the futures contract, Sam, not trading the futures options, but trading the futures contract itself. This is the micro wheat future. So the tick size, let's kind of walk through this really quickly. Tick size is 0.5. Tick value is $2.50. So every time this moves, that's our significant digit. When that moves from 0.05 to 0.0, that's going to be a $2.50 change in the value of the contract. The point value, when this moves, when this number moves from 8 to 9 or 8 to 7, 648, that number just to the left of the decimal is going to be our point value digit. And so when that moves, that's going to be $5 value change in this contract. So you take that $5 value change, you times it by the 648, and that gives us the notional value of our contract. So $3,240 is the notional value of these contracts. This is a micro contract. This is the small contract. And if I click on the down arrow here and I come over to my futures grid and I go to micro wheat futures, my initial margin into this trade to go long one contract is $192.50. So lower barrier to entry into this trade, lower cost to enter into this trade in terms of what I have to set aside in that initial margin. This isn't a very volatile product. We're not talking crude oil here. We're not talking gold or silver. We're talking micro wheat futures. So looking at trading this in perhaps a little bit more, it's no less important to pay attention to the trade, but it is a little bit less impactful when it comes to a margin requirement to enter the trade. So what I'm going to do is I'm going to come over here and I'm going to right click and I'm going to say, all right, let's do a buy custom with OCO bracket. And I've already gone through the numbers in terms of putting this trade together. So my entry, current trading price, and I'm going to trade this at a limit order, not just a market order. So I'm going to look at this current trading price is 647.50. So I'm going to give it a little bit. I'm not going to give it 648. I'm going to give, well, actually I will, because I'm going to give it to 648 even and not 648.50. That's just where I placed my cursor. And we're going to make that a limit order. I'm going to try to trade inside this, right? And then I'm going to look at setting my target, which is a sell. If I'm going long in the contract, in order to close that contract down or close that position down, I've got to sell it. So I want to sell this if it gets to, we said 7, I'm going to call it 710 is where my number here is to the upside. So we're going to make that one, the limit order on the upside, 710. And I'm going to make that good till canceled because it's probably not going to get there today, right? So now we're going to set our stop down here at 605. We're going to say, all right, if this moves to 605 or below, then exit. Now, that's going to be a stop market order. And remember that when we do a market order on a futures contract, that gets worked as an exchange designated limit order within a protection band. There is a possibility that order could not fill if the price moves very, very quickly. But once again, it's not a very volatile contract. It could move, but again, it's not necessarily a really fast moving contract. Doesn't mean that there's not risk, but it's not a very fast moving contract. And so we put this trade together. I'm going to click on confirm and send. I'm going to read through this order to make sure that this is what I want it to do. Buy the contract at 648 limit, and we're kind of sitting right about there. It's in that range, so we could look at entering that trade at this point. Sell it if it goes up to 710, or sell it if it goes down to 605. And that's kind of the range that we're looking at trading this in terms of this impact. Impact to this trade of this one contract, going long this one contract, we've got to put up an initial margin of $193 per contract. $193 per contract. Lower barrier to entry into the trade. Now that maintenance margin is going to change. It's likely to go down a little bit as this continues to go either to the upside or to the downside. But if volatility increases, that maintenance margin is going to increase, and so is the initial margin. But we're going to go ahead and we're going to put this in our futures group. And we're going to click on send, and we're going to fire that order off. And we got into the trade. We got into the trade at 647.50 because we had a limit order on that. We were willing to get into the trade. Now we are long this futures contract, and we want to see this make that move to the upside. And so why doesn't Thinkorswim show the max loss in futures? Because the futures contract could go up or it could go down significantly. So you got to figure out where your exit point is in terms of what that risk is in the trade, Dagan, in this move. Now, and a couple of people ask the question, well, why aren't I using something like the /ZW, which is the larger wheat futures contract? So you notice this is now 10 times larger. Point value is 50. Tick value is 1250. The notional value 32,400 or 400 and now 387. And if I look at what my initial margin is in the trade, it's 10 times that, right? It is 1925. So you could use this larger contract. The movement is exactly the same, but the micro contract a little bit smaller and manageable risk. There are others. There is the E-mini wheat futures, 385. Same thing. Notional value is double what our micro contract is. Point value is double. Tick value is a little bit larger. And so you can see the initial margin there, 385. You could use either one. I used that micro simply because I was looking at my micro watch list when I came up with that. Now, here's what I wanted to show today. And I kind of wanted to get into this particular discussion. And as we start to see that moving in the direction that we're moving, yeah. So we'll walk through that real quick here. Before I go into this, let's go back to our /MZW. What's the potential gain on that trade? 648 was our entry. 710 is our target. So let's walk through this. I've got this in here. So what we've got to do is convert it into moves. So let's put this in our calculation here. Our entry was 648. Our stop was 605, right? Stop was 605. Yep, stop was 605. And our target was 710. 710. Okay. So that means our up move in this particular case, let's just go through the math. 710 minus 648, 62 points. Okay. So now what we're going to do is we're going to take that value and we're going to divide it by our tick size. So 62 divided by 0.5. So that's 124 times. So that is, let's see, 124 ticks. And that's going to be times 250. $2.50. So 124 ticks times $2.50. Max gain on the trade, 310. There you go. You got it. So RB Tech Trader, yeah, yours was a little bit faster. I just wanted to walk through the math. $310 to the upside. Potential gain on the trade for a slow moving contract. All right, now here's what I wanted to get to. Thank you for giving me that opportunity to walk through that. Let's go back over here to my single grid that we can kind of play with and use as our view here. So I want to bring up this one, /BTC, and this is the Bitcoin contract. Now, actually, you know what I'm going to do? Yeah, I'm going to leave it on this one. I'm going to just hide a couple of things here. Let's hide that. Let's hide that. Let's put this on not ADX. Let's click on apply and OK. So here's the Bitcoin contract. This is the Bitcoin futures contract, which is a pretty substantial contract. If you look at the futures requirement, the margin requirement for this, $108,000 initial margin into this Bitcoin futures contract. But what I wanted to show was what this Bitcoin contract is basing its move on, what basically the underlying price is, or the spot price is. So now in the Thinkorswim platform, you can pull up a quote. You have to specifically search for it or put it in. BTC /USD. BTC /USD. And this has been live in the Thinkorswim platform since February 7th. And this is in anticipation of being able to trade soon spot crypto. We're not talking about that right now, but there is more information available at schwab.com about that. But this is the spot crypto price. This price, spot crypto. Now, it has that /USD because this is being quoted in US dollars. This symbol for BTC /USD is very similar to something like EUR /USD, which is the Euro US dollar currency pair. But you know what? It would be the same thing as if we were to do something like AAPL /USD. That is Apple quoted in US dollars. We don't have to do that because we just assume that it's quoted in US dollars. But for the Bitcoin contract, or for the Bitcoin spot price, /BTC /USD reminds us that this is quoted in US dollars. Now, what I want to do is I want to leave this one on really quickly, and I want to put on here a comparison line so that you can see the comparison. So I'm going to put on a comparison line, and I'm going to compare this to /BTC, which is the Bitcoin futures contract. Apply and OK. So you notice something, the pink line here, that purple line, is the Bitcoin futures contract. So somebody always asks me the question, well, how does the futures contract move in relationship to whatever the underlying instrument, spot price of oil, spot price of the index, spot price of wheat? This is the relationship between Bitcoin spot and Bitcoin futures. And you can see that at some points in time, the futures trade at a little bit of a premium to, and at sometimes a little bit of a discount to spot crypto, spot Bitcoin. It does not typically move outside that fairly narrow range unless there's some kind of news or some kind of anomaly. Because when that range gets too far outrageous, if you start to see the Bitcoin futures higher than spot crypto or spot Bitcoin, there's an arbitrage relationship. Vice versa. When the futures are lower than the spot, you're going to see an arbitrage and prices are going to come back together. That's the whole premise of arbitrage and trading differential markets. So because of that, I wanted to show this, and I wanted to show this correlation tool. This is simply a comparison tool. You could put on here a correlation, and you can see how correlated these are. In fact, let's do that really quickly. I've got that correlation tool available really quick. And let's do /BTC. Let's see the correlation between spot currency and crypto. And unfortunately, it's not doing that. All right. All right. So let's jump back into this real quick. I know we're out of time, but I just wanted to address that. I just wanted to show this, that is now available, as is ETH /USD, the Ethereum contract as well. So there you go. You've got that relationship. There is a micro version of /BTC and /ETH. So both on Ether and Bitcoin, there are micro futures contracts as well. Real quick, if you want to learn more about this idea, you want to learn more about trading futures at Schwab, schwab.com/futures. Jump over here to the Trader Talks webcast page. Make sure that you click on subscribe if you want to learn a little bit more about those things. If you want to learn a little bit more about technical analysis or price patterns, right there, you can join us for those particular webcasts. My thanks to Connie Hill for helping out. My thanks to our producers and our great reviewers. And we will see you again very soon. Thanks, everybody. Have a great day. Take care. Bye-bye.